Good morning, everyone. This is Bruce at Fleet Capital Management. It is Saturday morning, the 18th of March, 2023. I want to give you a quick recap of the market from last week and some impressions as we move into next week. Hopefully this will be a fairly short video. We'll take it as it comes. So, as always, we need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to this YouTube channel, and if you have questions about anything, please feel free to email me, bruce@fleetcapitalmanagement.com. Our website homepage, fleetcapitalmanagement.com, two buttons. The lower button will take you to our most recent weekly market analysis videos. The top button is the most important, and that is if you have questions specific to your situation, your account, your concerns, all you have to do is click on this and schedule a Zoom meeting with me, and I'm always available and more than happy to talk. So let's take a look at the markets. Here's the S&P 500 on the daily basis, and each line is 1 day. And I have drawn this white line across, and this goes to, let's see, 1, 2, 3, 4, 5, 6, 7 trading days, not a calendar week, but 7 trading days. And what I did was the market 7 trading days ago closed right here where I have my pointer, where that white line begins. And Friday, yesterday, the market closed exactly where I have my pointer and where that white line is. What does that mean? What does that mean? Well, to me, what it means is we had a very, very volatile week in the market. We had the continuation of smaller bank failures. There was an enormous amount of noise and volatility and upsetment through the entire time. But in the last 7 trading days, the market has gone nowhere. So it hasn't gone down because of this banking, I'm not going to call it a crisis because I don't see it as a crisis, but I find it fascinating that the market just closed on Friday exactly where it closed 7 trading days ago. Again, maybe that doesn't have a lot of importance. I think it does. So let me take that off. And let's continue on. This green band right here is an area of potential support. You can see that we went down to that area, touched it, and actually bounced off of it. So that support level seems to be holding. Up here, this red level is a level of what's called resistance. And we have gone up a couple of times near that level, and this is a weaker level of resistance. This is a stronger level of resistance. You can tell by the width. So it looks like we've just been in kind of a trading range. It's upsetting because we see so much volatility, and what we notice is the downside volatility. We rarely notice the upside volatility, but we really haven't gone anywhere with all this banks stuff. So what that tends to tell me is the market is digesting it fine. Usually on the day it comes out, there are big, huge moves, which there were. Here was one, and then followed by another, and then banks, the market seemed to get comfortable with it and what the Federal Reserve Board response is to it. So, not to belabor a point, but I don't feel terribly worried right now about the market. Yes, the RSI is below 55 level. That's obvious. We've been in a weak market, and that just shows some weakness. The DMI, the red, has been above the green, which I don't like to see, but the red is coming down, which means the momentum of that downtrend is weakening significantly. I'd like to see the green pointing up, but hopefully we'll get a cross here. A couple other things. We have a bearish money flow, and we're below the 50 line. These are not things that I especially like to see, but they are obvious in a weak market. But again, none of these things are giving me a huge amount of pause as we move into next week. I could also draw the last Fibonacci retracement. Let me expand this just a little bit, maybe make it a little bit easier to read. And here was that 618 or the 61.8 level, which we did break. We broke it concisely. I mean, significantly. But if you look at Friday's close, we're just below the 618 level. If we were to close on Monday or Tuesday above the 618 level, that might also act as an area of support. So we'll see about that. Just a number of things. Nothing is completely conclusive. I will tell you that on a technical analysis basis, yes, things are in the negative. There's no question about it, but I'm just not feeling very nervous about the market right now. Here's another reason I'm not feeling as nervous. Let me go to the Qs. This is the NASDAQ, and what I'm going to do is I'm going to switch this to a weekly view, because I want to show you something that I noticed just recently, and I'm actually going to change this also to a candle view. There we go. So on Friday, here was the most recent candle, and this is for a week. Each candle is 1 week now. This candle is called a bullish engulfing candle, and you can see that the degree of this candle is wider than on both the top and the bottom the week before. And it closed higher, and it closed above that level of support. A bullish engulfing candle is considered in something that I use quite frequently, and it is Japanese candlestick analysis, a very bullish sign, meaning it opened the week at the lower point, it closed the week at the higher point, and completely engulfed the previous week's candle. Again, lots of different types of technical analysis. Does one thing work 100% of the time? No, but it works a lot, and it works a lot more than not. So I like what I'm seeing here. I'm seeing that the RSI on a weekly basis is getting ready to cross above the 55 level. I like that the DMI plus, which is the directional market indicator plus, is in the green, and the red is falling. I like that we've got a bullish money flow for the week. Now, this is for the week. And I like that we're over the 50 line on the MFI label. So again, maybe the benefit of all of this analysis is that I'm just not feeling terrible right now. I'm not feeling terrible. Now, next week, we have a Fed meeting. I believe it's Tuesday, Wednesday, and I think Wednesday is when they will announce their rate decision. The evidence, or the suggested evidence, is that they will raise rates 1/4 point. There is also about a 25% possibility that they will not raise rates. I think that either would be fine. If I was a board governor, which I am not, I would vote to pause and not raise rates. The rapid pace of which they had been raising rates is one of the major drivers that has caused the banking problems. And again, when I say banking, we're talking about regional banks, not national banks as much. And they need to pause on that. So we'll see what happens with that. So that's next week. A potential first indictment for former President Trump is expected to come next week. At least President Trump said that it should come on Tuesday. I don't know what day it's going to come, but I suspect it will. Will there be protests that he is calling for? Yes. Will there be violence? I pray there's not. We certainly don't need a January 6th again, but there's going to be a number of things happening next week that we'll need to keep our eye on. When those things happen, and they are usually very short-lived, they are grounds for volatility. So I suspect we're going to have volatility next week. Now, remember, volatility means it can go down more than average or up more than average. I don't know which will take place, but I do expect volatility because of these short-term news pieces that will be on our radar for next week. I also feel that once we get through next week, or maybe the next 2 weeks, there is a higher probability of this market moving higher, or I should say a greater probability of this market moving higher than lower. I've sent out a couple of articles from other analysts that I follow regularly. The guy, Kevin from Zacks, wrote a great piece that I emailed to you. Tom Boley always writes great pieces that I've emailed to you, and I'll send you these from time to time. I don't want to overload your inbox. But there's a lot of smart money on the street that is suggesting this market has a long way higher to go. Could we go down before we go up? Yes, the market can do anything it wants, but my feeling is that this market is going to start moving higher, and I'm obviously, along with you, looking forward to that. So that's really all I have to say for this week. We're just going to have to wait it out a little bit, see what happens next week. I am always available if you want to talk and talk about your portfolio, your risk level. That's of critical importance. And it's much more difficult than it sounds on the surface to evaluate risk versus reward, greed versus fear. And so if you want to have an in-depth conversation with me, I'm always available. And just to reiterate, it is your money. It is not my money. My job is to give you the very best advice I can. Your job is to make the final decision because it's your money. So we will have those in-depth conversations if you would like. I think we just need to be a little bit patient right now. We need to take a breath right now and see how this plays out over the next 2 weeks. My gut is telling me we're going to play out to the upside, not the downside. But again, that's just how I'm feeling based on my research, and we'll see what the market chooses to do. So that's the story. If you have any questions for me, please let me know. Again, I'm always available and would love to chat with you. And hopefully we'll have a good week next week. Okay. Talk to you soon and let me know if you need me. Bye-bye.